Welcome to TradeTheMBI.com. This is John. This report is for the 22nd of December as we head off into the holiday for the beginning of the week. And pretty much we're still in line. I mean, we had this nice retrace that came back, filled a little bit of the positive extremes, not all of them. We only came back to the secondary one. That's still left all the way down to the 4702. But again, you've got to have, like here, some degree of short interest that suggests that there's enough power to drive things lower, or enough fear that that's going to happen. What we talked about the other day was the angle of this ascent being too significant, and that it needed to fill back some to alleviate some of that extreme pressure. And when you get too parabolic, there's always going to be a return to the mean. And we also looked at this from the only weakness sign we could see here was the steel dipping below negative 13.5, which is the equivalent of it coming from the top. And as soon as it moves back above negative 13.5, you're going to be back in the positive run with a full reset, which should drive to new highs. Now, when we look at the MBI magenta, yeah, we've been in extreme levels. Same thing with DOC red and that. And for the first time, we actually have a meeting of cyan and green. I haven't seen that since, that was all the way back here on November 27th. So long time since there's been any expression of enough short interest to do a thing. Has it still generate anything? No. I mean, when you get too many people moving any one direction, either to the upside, or then when the fear strikes, they run. And this was an opportunity for algos to jump in and take advantage of people who are jumping in short heavily and force them to cover. Now, when they're gone, will that cause an increase in shorts? Well, potentially, but we're not seeing it at this particular stage. So before you get all worried or excited that this is the short end, it's not there yet. It's not. So relax from that. In fact, we're poised to make new highs based off of what we're seeing at this particular stage, unless there's a really complete breakdown. But from a bull standpoint, you definitely want to see that easing of the DOC red back to a normalized level, and you can make another run. We're still congruent with shakeout readings here, higher histogram, higher highs. So that's all continued. In this retrace here, it'll be the first turnaround, and as long as it remains above zero, breakdown below zero obviously would have much more negative connotation, but we're not there yet. And you can see the ABM levels. Not hard to just match what each one of those are, and you just work it from there. From an NQ standpoint, even stronger, because we go back to look at the positive extremes from an NQ standpoint. Oops, one too many clicks right there. But goes all the way back to this level at the 16.3. Nowhere near that, even from this retrace, and still quite a range between the 176. So any move back in between there is just going to be a leveling off. And from a technical analysis standpoint, that would be pretty close to the levels of just retesting the high breakout, and that would be very normal. Does it take some time? Sure. And there's still plenty of enthusiasm. And if the Fed is doing what it's, everyone's projecting, at least the bond market is suggesting the Fed is just going to start dropping interest rates by, 50, 100 basis points instantly. Going to be tough to do if the world scene changes as we are seeing with the Red Sea stuff and potential move for oil. So again, this is where you flip to oil. It's like, okay, am I seeing in such a dramatic ease in inflationary pressures that's justified? Well, no. If oil were down in the 50s or something like that, absolutely. But it's still elevated, which still puts upward pressure on price, and there's no control of the CPI. Of course, we talked about this before. The Fed isn't really worried about that target so much as long as it's close enough. The real question becomes, is there enough of a slide in economic activity that warrants it, and will there be enough surplus in oil simply due to reduced economic activity? And that's always something that we look for outside of the fear elements and things like that with world events. The real question is consumption rising, and is world economy continuing to improve? And you can see dollar devaluation with the euro. From that standpoint, continuing, the euro is not doing any better, nor is the eurozone. In fact, the eurozone is in pretty bad shape overall. But if they're able to hold the line on rates, that would be a great mitigation with the U.S. dipping. That would justify euro popping into their upper range, which gets us back up to that 113, 114 range, which I think ideally business in America would like because that improves their bottom line. No question about it. Gold slowly making its peak up to, it's way behind where it should be going. I mean, merely just look at crypto and you can get an idea of where gold relatively should be moving, and Bitcoin continuing its escalation. And it's got to push up against that 45 resistance. And if it can break through there, well, then it's a whole new opportunity for it to get all the way back towards its all-time highs. We saw ETH, which was lagging Bitcoin's move before, catching up. So significant move there, strong readings from that. So I think that enough people are looking at the excitement of crypto space for the coming year, the potential for ETFs and regulatory approval on a variety of this, that, and the other. Any hiccups with those things, though? Could see major downside effect on that because there's a lot of pre-build. Again, you buy the rumor, you sell the news. From a 50K standpoint, you had the nice fill back in, which was just to fill back most of these positive extremes. Came up, hit the 50%, retraced, weren't able to go back towards the zero, and in that failure to reach the zero, you create a nice pushback all the way up over the 50. We're seeing again a little bit stronger increase in short activity MBI right at that 50%. So break of that 50%, and you would be looking for a move back towards the zero. And it would not be incongruent. I mean, you've got a little capping situation going here. If you come back down, retest those lows, you make a strong move. And from a daily standpoint, that would be extremely healthy simply because it would certainly ease the overbought, if you want to even call it that, or just, I would say, the parabolic nature of the move, where it sort of, reasserts that price has actually been found, and everyone's in agreement with where that is. From an intraday standpoint, I have to go back to the 5-minute chart, which, I hate the minute charts in general. I mean, you see so many people use them, and of course I just have problems. Sometimes the 5-tick just crashes for no good reason on TS back and forth. I'm still working to figure that one out. But the problem with time is time doesn't buy anything. It's much like people putting a line on there and saying, oh, well, this is support. Well, it's only support if you have readings that justify the fact that there are going to be buyers coming in at that point to, jump in and say, yeah, this is a level that, we're excited about. And so the same thing with time. Building, candles off time doesn't really do a whole lot because time doesn't buy anything. Now we have ticks. Yeah, those are actual trades. So then something. So while it still works, it's not as clean as on tick charts, but you can see we had the little dip, and as soon as everyone get exuberant to the downside, you just roll them over, and that creates a nice little push back to the upside. Here we're getting we had a little bit of positive extreme activity that took it all the way back to the 47.79 range. And in post market, you can see we got down to the 85, so it's pretty close to filling all of those right back in place, and then right back up. So market's doing pretty much what we would expect from a normal behavior as far as the backfill of that intraday, and still maintaining its overall trend. And despite headline justifications, this and that, there really hasn't been anything that changed the upward bullish momentum of things. That's the long and the short of it. As always, though, look for me on Skype chat. Trade well. We'll have a good one.